I am making two major changes to how I run the earnings strategy compared to how I did it this season, and I wanted to share them with you. The first change is going to be that I'm going to switch back to trading straddles primarily. And the second change is I'm not going to be buying wings anymore. I think I'm done with it. Tried it. Cost was too much. I don't think it's worth it. Just eats into your edge. You really need to be capitalizing on your winners. And for a couple of reasons, I think this overcomplicates the position. And so I want to go over that today. So the first thing is just to reiterate why we started off looking at trading these strangle strategies. It's based on the findings from Jay's case study on earnings where he made, 250 grand or whatever trading earnings in the last 2 years. And we broke down the performance by, short tails, strangles versus, shorting at the money straddles. And we can see that both of them had pretty good performance, but in the end of the day, it was the strangles that had this really clean performance. But I want to talk about why this might be a little bit deceiving to look at this and just assume right away that this means that strangles are significantly better than straddles in terms of their variance. The main reason is if we actually break down these trades that go into it, they're not the same trades, right? It's not like straddles and strangles were traded on the exact same positions. And so we have a apples to apples comparison. When we look at the individual trades, right? I'm not going to pull them up right now because you all have access to this spreadsheet. You can go through it and find the biggest losers. You'll find that all of the biggest losing trades were on the short straddles, not the short strangles. And the reason this is important is because how would these P&Ls look if those trades had been taken, which they were, but a strangle was traded instead of a straddle? Would these graphs be flipped? Would this drawdown here primarily be on this side, and then therefore the straddle would be the P&L that looks the best? Something that I've sort of noticed, if we just look at it in terms of a win-loss distribution by strategy, the number of winners for the short strangles is higher than it is for the straddles, but we would expect that, right? But we should also see that the average loser is also bigger. That's what we should see on average. It's the way these things are structured. And that's what we've seen in our performance, right? We've had a couple losers here that were maybe a little bit more drastic compared to what they would have been with the straddles. And the reason is because when you trade a straddle, you don't need to pack on as much size to get a meaningful return out of a position. And so let's say you sell a strangle that's 10% break evens. If the stock moves 12%, the position's down 500% relative to the premium because the actual amount of premium you're collecting is so low. So really a small move outside of your break evens becomes pretty devastating. The next thing is that I find the liquidity in the strangles to be a little bit worse than you're getting with the straddle. And that makes getting into positions a little bit more costly, but it also can make exiting them a little bit trickier, especially if there's no move. The wings basically, now you're in a position where you're are you holding these wings to expiration or something, or you're just paying to get out of it more than you would be at the money. And I just found that it overcomplicates exiting in the morning, makes things a little bit trickier. And in the end of the day, we're trading the implied versus realized move. As long as that persists, there's a risk premium there that persists, we should continue to trade this strategy. And if that goes away, then we should stop doing it. And if it persists, we should make money running this strategy. So I'm going to switch back to the straddle. I think it's cleaner. I think it's easier to really see your risk exposure. Maybe I'm just not good enough to trade the strangles. Just keep screwing them up. But I think it makes sense to just go back to basics on it and not try to get too cute with the structure we're trading. Speaking of that, I'm going to be dropping the wings. I think they're too expensive. Causes all sorts of issues with exiting the positions. It overcomplicates my book. By the end of the week, I have 50 pairs of wings just sitting in my portfolio. I guess they'll help me once in a while, but I really can't tell if it's just totally eroding my edge or not at this point. There might be individual trades on a case-by-case basis where I feel there's more risk, and therefore buy some wings. But as a rule of thumb, I won't be using it that way anymore. I won't be just buying wings for the sake of always having this, reinsurance protection type of thing on the portfolio. We tried it here for, 15 trades or whatever. And, like we had winners and whatever. But, we even had, like in the end of the day, if we're getting hit, we're getting hit. Like, there's still going to be losers that are huge. And I think it's just trying to, it puts you in a weird mind state where, or at least what I found for myself, where I wasn't like quite embracing the variance that I should, like the risk that I should be when running this strategy. And I found myself starting to try and, structure good risk rewards and blah, 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 which is not really the point of the strategy, right? That's not how you want to be thinking about it. So I'm just going to stop. And we're just going to let it rip next season, the end of this season and next season. We're just going to let it rip. Something else that I'm going to be doing just to further replicate, my mind just totally jumped to a new topic. I'll mention it anyways. I'm going to be doing contributions to the account that we're trading together, probably at like, 3 to 5K a month, something like that, starting in the new year, to sort of replicate like even how if someone's trading with a 40K account, I still think you should be contributing to the account and not just relying on some sort of compounding to grow it. I think that's really going to accelerate things. And so I'm going to be doing that as well. And you'll get to see how I scale the positions as the account grows that way too. So that's something that I'm going to start in January. Sorry, my brain jumped to a different topic. Anyways, coming back to this, 2 changes. We're back to being a part of Straddle gang. No more Strangle gang. Change number 2. Wings are lame. We're not buying wings anymore. Embrace the risk and take lots of trades. That's what we're doing. We put in a lot of work this season. We placed a lot of trades, and just to see, a significant amount of the profit be eroded from the wings, as well as a lot of liquidity issues, and really just not seeing this extra value from doing the strangle over the straddle. It just doesn't seem worth it to me at this point. Even though, like, theoretically it makes sense that the wings should be a little bit more pricey, it just doesn't seem worth it to me at this point. I'm sure there will be people who disagree with me, and I'm not saying that you should entirely switch what you do as well. I'm just figuring it out live with y'all and, showing you guys how I'm thinking about things in real time. So please share with me your thoughts. Let me know if you think I'm being too, harsh with my switch here. Let me know. With that being said, let's take a quick look at the terminal here. Cool. Y'all should have access to this by now. Here's a list of the trades for today. We've already yapped for a long time, so I'm not going to break down a trade in this video in particular. But there's some good trades on the table. Take a look. Let me know what you think. We can chat about it in the comments or in the group. All right, everyone. Take care. Let me know what you think. We'll talk soon.